What is going on, gang? Welcome back to Tukey Supply and Demand Bootcamp. Hope you guys are doing well. For this video, we are going to be covering how to find high probability supply and demand zones that are actually likely to work out for your guys' entries, to work out in terms of an exit point to get out at the best point possible before price does reverse. Overall, just understanding how to find high probability supply and demand zones. Now, we went over this very briefly in the video of how to draw these zones out. This zone is going to be somewhat similar, a little bit different. This is how to actually find the best high probability zones, because obviously there are tons of new supply and demand zones and old supply and demand zones that you can go off of. But which zones do you realistically want to target the most and identify the most in terms of understanding, okay, is this actually likely to provide us with some sort of reversal? So let's go ahead and hop on into it. The main thing that I want to start with is overall matching your supply and demand zones across multiple different time frames. For example, for me, I'm drawing my supply and demand zones out on the 5-minute, the 15-minute, and the 30-minute time frame. I like to start out higher and then kind of narrow my way down on the lower time frames. So for example, let's just say we are starting out with the 30-minute time frame. Now, let's just go ahead and get rid of this so we can do everything fresh here. So boom, we first want to identify, obviously, let's start with a supply, right? We first want to identify some sort of supply zone. Therefore, we want to be looking for, like I covered in the how to create the zones videos, we want to be looking for a strong high being created, then led to an aggressive move to the downside. Keep in mind, I'm starting on the 30-minute time frame. So boom, we have our 30-minute zone being marked out, our 30-minute supply. We were to go ahead and extend that zone out all the way. Now that we marked out our zone, like I said, we want to match it across different time frames. So we started on the 30-minute, we have our 30-minute supply zone. Now let's see if we can narrow it down to the 15-minute and see if the 15-minute can provide us with the same supply zone within the same range, obviously on a different time frame. Like I said, the more you're able to match up these zones on multiple different time frames, the more confirmation you can actually get in terms of understanding, okay, is this actually going to give us the reversal we're looking for? So boom, as you can see, 15-minute was created right here. We extended it out all the way. This looks pretty identical to the 30-minute. So you can see here, strong high being created, then led to an aggressive move to the downside, and this is pretty much identical. So this is actually a really good confirmation, something I would really like. So boom, we would obviously just mark out the candle that started that initial move to the downside, which would be this black candle here. I'll zoom in on it. It would be this black candle here, right where my mouse is. So we would just go ahead and mark that out on the 15-minute. Boom, boom. Extend that out all the way. Now you can see price literally to the tick taps into our supply zone. Looks like this market close, but still we gap down off of that supply zone. And then right here, another beautiful example. We tap into the 30-minute supply. We tap into the 15-minute supply, literally to the tick, and price absolutely just dumps down from there. Now, let's go ahead and get even more confirmation. Let's now switch to the 5-minute. So we drew out our supply zone on the 15-minute, on the 30-minute, and they both matched out really well. So going back, this looks pretty identical as well and similar. Obviously, that is a really good thing. On the 5-minute, we have a strong high being created right here, then led to that aggressive move to the downside, right? Which obviously would indicate supply being created. Now, boom, now we have our 5-minute, our 15-minute, and our 30-minute all matched within each other. Now, obviously, you don't have to have all three zones like combined at the same time always, but as long as you can just understand that yes, they do match up on multiple different time frames, then that's beautiful. But realistically, like let's say you don't want to have all this clutter on your charts, you can just keep 2 zones or even just one at that point. Just make sure when you are looking to get that confirmation, they are matching up on multiple different time frames. Now, let's say we want to get even more confirmation. Boom, narrow it down even more. Go to the 1 minute. The 1 minute's going to look a little bit different just because that's obviously how it is as opposed to the higher time frames, but still, you can see if we zoom out right here, something very similar to what we just saw, right? We can see a strong high being created right here, then led to that aggressive move to the downside. So essentially we would mark out the point that started that strong move. Now we have pretty much a supply zone on the 1 minute, the 5 minute, the 15 minute, and the 30 minute. Now obviously if you want to do it on the 1 hour or the 4 hour or different time frames, whatever works best for you. I'm obviously just going over what works best for me in terms of understanding, okay, which zones are actually going to be locked in for us. So boom, that's one of the biggest things you want to look for in terms of understanding, okay, how high probability is this zone? How confirmed is this zone? And if it's matching up on multiple different time frames, that is beautiful. Now, another thing you can look for is, let's say we are on the, we can do the 5 or the, or let's just start with the 1. Let's say we're on the 1 minute time frame, okay? Let's go ahead and get rid of these zones, so we really only just have one. So look, this is our 30-minute zone that we had marked out first. Now, once you have your zone created and that initial move to the downside, you want to look to see, keep in mind this is another thing we can look for other than matching them on multiple different time frames. Another thing you want to look to identify, are there any key levels inside of this zone that are being created? For example, any sort of support levels, any sort of resistance levels, any sort of fair value gaps, anything like that. For me, one of the confirmations or confluences that tend to work best within these zones are, is there some sort of fair value gap within this zone? Now, as you guys can see right here, it looks like we have a 1 minute bearish gap, which would be created right here. Now, we can extend this zone out and see if that matches. Now look at this, literally to the tick, literally to the tick. We have the 30-minute zone, which is this wide area, and then we have that 1 minute bearish gap that was created that obviously we extended out all the way, and price tapped into first the 30-minute, and then to really narrow it down, get more of that confirmation, we found a key level inside of our supply zone. So we pretty much have a key level inside of a key level. A key level is essentially just an area on the charts where price is likely to, where sellers or buyers are likely to provide price with some sort of reversal, right? That's what a key level is, just anticipating some sort of reversal at that level. Like I said, we had that bearish gap, which is where obviously we would anticipate some sort of reversal. So we have a supply zone on multiple different time frames. We have a key level mixed within each other because a supply and demand zone is also considered a key level. And boom, we extend that zone all the way out. Price tapped into our 30-minute, tapped into our 1 minute demand zone, and absolutely just plummeted from there. So beautiful. That would be another really good example or confluence that you can use in terms of understanding how high probability is this zone actually. Now, let's go ahead and find a demand zone. Looks like we actually have one right here. I believe there is another example we did earlier. So right here. So let's go ahead and get rid of all of this so we can do everything, completely with each other. So now we are going to want to look for a demand zone. Therefore, we want to look for a strong low being created, then led to an aggressive move to the upside. Same thing here, strong low being created, then led to an aggressive move to the upside. Keep in mind, we're on the 5 minute time frame. So boom. So let's go ahead and mark out this demand, extend it out. Boom, boom. Okay, cool. So we can focus on this first rejection. So now that we have the 5 minute, Instead of narrowing it down, let's start to go up on our time frame. So we drew our demand zone on the 5 minute. Let's now switch to the 15 minute and see if we can match a 15-minute demand inside of that 5 minute demand. Now, beautiful, we have the exact same thing here. We have a strong low being created, then led to that aggressive push to the upside, right? So same thing here, another demand being created, or essentially this is just price respecting that previous demand, but we have like a new bullish order block being created right here. So let's just go over this here, right? So the first point where this demand was created, this is the 15-minute. We mark out the 15-minute, extend it all the way out, and as we can see, price taps our 5-minute and 15-minute demand beautifully, and we get that rejection back to the upside. Same thing here. We have this new zone being created because this is ideally what provided us with a bigger move in terms of buying volume. So let's say we want to target this one here instead of this one. So what we would do in this case scenario is obviously, like I mentioned in the video of how to draw out the zones, if the wick or the candle that started the move is simply just too wide, you then want to mark out the halfway point of that candle. So let's go ahead and mark out the halfway point and then go down. This is on the 15-minute, and then extend that out all the way. So now we have our 5-minute and our 15-minute demand that is drawn within each other, okay? Now, boom, price then once again taps into our demand that matched up on multiple different time frames, and price absolutely just ran to the upside, right? Started to just continuously make new highs. Now, another thing, where or are there any key levels created inside of this specific demand zone? Now, obviously, we just have these lows that were created right here, one low created right here, another low created right here. So essentially, that would be support or a support level that's created within a demand zone. But it looks like we don't really have any bullish gaps other than this one right here. So as you can see, we push up on the 15-minute. If I zoom in, you can see on that initial push up, we have a bullish gap being created. So ultimately, we just know that, let's mark this out, we know that this price area as a whole, right, this price area as a whole is ultimately an area where we are anticipating buyers to step in heavier than usual. And it's not even much so anticipating because we had already gotten multiple confirmations that price respected and rejected off of this zone. Rejected off of this zone, obviously, due to the fact that those buyers were looking to take advantage of this area, right? Demand zone just being that low discounted point on the charts where buyers are looking to step in more than usual, right? Like I said in one of the more previous videos, supply and demand is everywhere on the charts. But as the retail traders that we are, and to catch the solid high volume moves that we want to look to utilize supply and demand, which is essentially just looking for those areas that are providing us with more buying orders and selling orders. Buying orders and selling orders is simply just money. The more money that is being inputted, the more volume we are going to be getting, which is ultimately what we want for these trades. No one wants to trade during chop. And then you can see once again, price did its thing, tapped back into that same exact zone that we had drawn out together, and absolutely ripped to the upside, right? Now we can see here that bullish gap on the 15-minute that we had created. Let's see if there's anything on the 5-minute. So let's go back to that demand and let's see if there's anything on the 5-minute. Now there actually is. So it looks like it's the same bullish gap that we had on the 15-minute. So let's just mark that out and extend it out, okay? Let's get our zone out, boom, boom. Now we have this 15-minute gap. We can see here, each time price tests this gap, boom, beautiful rejection back to the upside. Looks like we came back down a little bit lower, back into that gap and into that demand, But still, we know no need to freak out. All we need to do is just look for a valid entry in this case scenario, right? Now, another thing too is we can see here on this push up, we have pretty much support that was being created, right? On this strong candle, this strong push up, this candle here is ultimately what created that support level for us. So let's go ahead and just mark out that low because now we know we have that support level. Now, like I said, that's another confluence that we have. We had our we had this demand zone matched up on multiple different time frames, and we had a key level mixed in within that zone. As we can see here, price taps back into that zone, taps our key level exactly pretty much to the tick, and then reverses and literally goes to the moon from there. Literally. So that's another solid way to understand how to actually identify which zones are really going to provide us with that reversal, rejection, etc. Now, let's go over one more solid example and go from there. So looks like, let's do a supply example since we just did demand. So it looks like I actually see something right here. This could actually work out as well. This can actually work out as well. So as we see here, let's start on 30 minute, okay? Start on the 30. Right here, let's delete this so we can do this together. We have a strong high being created right here that then led to that strong push, strong move to the downside. Now, let me just make sure that that wasn't the zone we covered earlier. No, yeah, because here's the gap. Either way, you guys get the point. Okay, so strong high being created, then led to an aggressive push to the downside. We were to mark this out. Boom, get our candle. This is 30 minute. Mark out the candle that started the move initially. Extend that puppy all the way out. Look for some sort of key level within that zone. What do we see here? On the 30 minute, I zoom in. We have this 30 minute gap, 30 minute bearish gap created. So now we have a key level mixed in within our zone as well, which just ultimately gives us more confirmation that this price range as a whole is an area where those sellers are likely to step in, not just step in, but step in heavier than usual. Okay, extend that all the way out. You can see price taps our 30 minute, taps our 30 minute supply and our 30 minute gap, and we get an absolute beautiful rejection to the downside. Okay, now if we wanted to match this up on a different time frame, let's go ahead and do that. Let's say we go down to the 15, right? Let's say we go down to the 15. We then want to look for the same thing. We want to look, and it matches up here. We have a strong high being created, right? Strong high being created right here, then led to a strong push to the downside. Okay, so that obviously indicates supply being created. This is on the 15. Mark out the candle that started that move initially to the downside, extend it all the way out. Boom, taps that 15 minute literally. If we were to take a trade, boom, enter within that 15, stop loss and validation above our supply, target the previous lows, which in this case scenario we can target right here, or we can even target down here, right? So let's say we target both of those lows. Beautiful trade. Beautiful, beautiful trade right off of that supply zone. So that's going to be that. The biggest things is really matching up your supply and demand zones across multiple different time frames. B, identifying to see if there are any key levels within those supply and demand zones that you can match up and even utilize as an entry point. And C, which I'm about to cover next, is understanding what price is actually doing within those specific supply areas. So I'll show you guys an example of that right now. So as you see here, let's go to the 1 minute. Okay, let's go to the 1 minute, because this is where we can better understand short-term price action. right? I believe it was up here somewhere, or we don't need to go to the same zone. So we have this supply created right here. We then obviously want to look to see price tap back into our supply zone and read what price action starts to do inside of our supply zone. Okay, so we can see here, taps into our supply right here, starts showing really good signs of selling, right? Obviously on this, I probably wouldn't have entered just because I'd want to see more of some selling confirmation. We just had a quick candle down, so obviously I probably would have missed the fill on this. But right here on this rejection point, you can see we tap into this supply here. We get multiple bearish candles, multiple signs of selling candles, right? Which ultimately gives us that confirmation that sellers are actually stepping in within our selling level. And boom, if we were to take a trade, let's say we were to take it like right here on this push down, we can put our stop loss at a break above this high, target the previous lows, which would be this low right here, or even we can target like this low, for example, right? We can target this low. So let's say we target this low, boom, looking for an absolute banger on this, right? And we can see price absolutely does its thing off of our supply zone. So those are going to be the three key things like we just covered right now. The last one was understanding what price action is actually doing, whether we are getting more bullish than bearish candles, whether we're getting bullish wicks, bearish wicks. Let's say, for example, you start to get signs of bearish wicks inside of your supply. That's beautiful. That's a great confirmation. Let's say inside of your demand, you're getting examples of bullish wicks, or sorry, inside of your supply, I don't know if I worded that incorrectly, but inside of your supply, let's say you start getting examples of bearish candles, selling wicks, that's a great confirmation. Sorry if I reworded that differently. In demand, let's say you start to get examples of bullish wicks, bullish candles as opposed to bearish, that's great because our demand is treated as our buying level, our buying area. So we want to see buying pressure start to step in within that area. So boom, that's going to be it for this video. Hope you guys found some value, learned some new things. But other than that, I will see you guys in the next video.